Everybody. Wednesday, October 28th, I think, I'm guessing here. But yeah, welcome to the show. It's just me today. You got moi, no Melanie, but that's fine. We'll still rock it out, just just myself here. Um, yeah, Mel and I haven't done it live in a while, and we wanted to get back into it, back into the groove of things. And I thought today we would talk about a pretty cool subject and something that I find that real estate investors are not always necessarily keen on this, or not necessarily up to par on this, because it's not exciting, it's not fun, and I'm guilty of this. And now, thank goodness, I have a team that helps me with it, because I would procrastinate with this type of stuff. And this is going to be the documents that you need in order to actually get financing. Whether it's a financial institution or you're going through a mortgage broker, we're going to be talking about things that you should have ready and fire off to, well, your mortgage broker or the, the mortgage specialist at the financial institution. These are going to be the things that you should be ahead of the game on and get to them so that they can start analyzing your deal quicker. So yeah, we're live on a bunch of different platforms here. Let us know if you have questions. Kevin will read them out to me on YouTube anyway. So let me know if you have any questions. But let's start diving in. Got my cheat sheet here with my notes. But like I said, this is something that real estate investors, they put on the back burner because they love the chase of finding the deals. They love negotiating it. And they just can't wait to close that deal. But then they forget that, hey, by the way, you're going to need to send some documents in to get that deal financed, right? So let's talk about it here. Let's start going through it. And I'm going to kind of break it up into different sections because I know some of you are self-employed. Some of you have, let's say you're a T4 in Canada. That's basically, yeah, it means your salary or you get a paycheck, basically. So you're a T4 employee, or in the States, you're a W-2 employee. If you're self-employed, things like that, or in the States, I think it's 1099. I might be off on that. Don't quote me on that one. But this is going to be a list of different things. And then we're also going to talk about what you're going to need from the actual real estate agent, or from the listing agent, or from the seller in order to send over to the lawyer or to the attorney or to escrow to actually complete the deal. But let's start off with the actual financing part of it, okay? And like I said, I've got my cheat sheet here. So any financial institution, a mortgage broker, even the realtors, right? Even the realtors, when you're putting an offer in, they're going to need photo ID from you. I know Mel and I are putting in deals in the States. I sent them our passport picture so that way we are who we say we are. And then we also needed to give them our, like if you're buying the asset in an entity or in a structure. So here in Canada, we gave them our articles of incorporation. In the States, we have our attorney send over all of the LLC in that entity, right? So that way they have it for the offer. And not every realtor will ask for that up front, but at some point they'll probably need that. So we do all that before we start putting offers in. That way it's one more check mark off, right? And hello everyone on YouTube, too far away here. I got laser eye surgery before I became a firefighter, like 10 years ago or something, and the 20/20 is no longer in effect for my eyes. But yeah, so you're going to have to give them personal identification. So that's a no-brainer that typically everyone has a driver's license or a passport or a proof of, what's it called, Kevin? Proof of age? Proof of something like that, meaning that you're a certain age. There we go. Now I can see. Hello, everybody. Walter, Giorgio. Yes, we'll start going through some questions. Okay. So yeah, you'll need that. Now, I'll start off with the actual financing, okay? When you go to them, if you are an employee and you have W-2 or T4 income, you're gonna need to give them most likely your last pay stub or your last couple of pay stubs, right? To show, hey, I am employed, here is my typical pay, and give them a couple of different examples, copies, so that way they can verify your income. Now, they might also request, and I'm thinking back when I worked at the government, when I gave them my pay stubs, and then they also needed a letter from my direct supervisor, basically saying, hey, Dave is employed, he's been employed for X amount of years, he makes X amount of dollars, what was I going to say? And then also the permanent full-time blah, blah, blah employee, okay? So that's something that you might need to get. And then on top of that, you'll probably need last year's tax return. Okay, so even if you are an employee and you show pay stubs and that, they're still going to want at least last year's tax return. That way, you can verify that, hey, this is my income. Dave, can you invest in real estate with bad credit or no credit? Absolutely, Giorgio, and we'll go through that. So I'll go through this, and this applies to people with good credit and bad credit, right? So it kind of touches on, this can be applied, for all sorts of different situations. And that's why I love creative financing, because sometimes you don't even have to go through this, right? But this is if you're going to a typical financial institution or a mortgage broker. If you're self-employed, and let's say you have an actual business, they're probably going to want the articles of incorporation for that business. They're going to want to see how it's structured. If you fully own it, if there's partners, if there's shareholders, who are the shareholders, how much are they taking? So they're going to want to see if you are self-employed or a 1099. Oh man, can you look? Am I off on that in the States? Is it 1099, Kevin? Can you look? If you can look it up, I feel like it's wrong. I feel like I'm saying the wrong number. So don't quote me on that, but you know what I mean. If you're a contractor in the States, they're going to want to see something like that. They're going to want to see, in government forms, government issued tax returns, government issued, let's say your notice of assessment. They are going to want to see that. And typically with self-employment, and this is always something that comes up with when Mel and I create a new corporation or a new entity to purchase assets in. They say, well, we need at least your last 2 years of net operating. Sorry. I'm in real estate mode. I was going to say NOI, net operating income. No, they don't look for that. They're looking for your notice of assessment. Sorry, that's a real estate joke, which you may or may not get. But so they're looking for your NOA, your notice of assessment. And sometimes you've been in the business for X amount of years and you can provide them with at least the last 2. That's something pretty bare minimum that they'll ask. Now, if you're like us and you're always creating new entities, this is something you can't show them. And this is something that some institutions will, they'll shut the door on you because of that, or they'll say, hey, you haven't been, or this new business or this new corporation or this new entity is too new for us to finance, even though you're personally guaranteed. So they might kind of put the brakes on that. However, other institutions, I don't like using institutions that want that long of a period, because we're always creating new entities for liability purposes and tax purposes. So that's just something you might come across, but they will typically ask for at least 2 years of your net operating. No, oh my gosh. Notice of assessment. I was literally, before we went live here, I was looking at deals and I was doing the net operating income and looking at the cash flow. So that's why I'm still in deal mode here. They'll also ask, they'll want to see all other income. So they'll want to see whether it's, let's say, what's it called now? People call it baby bonus, but if it's any government issued funds, if there's any, let's say if you're divorced and you're receiving child support or alimony or anything like that, they'll want to see all the different types of income that you have coming in. Let's say if you do have another type of employment or anything, they'll want to see all the income that you have coming in. And then, that was the part I wanted to touch on. Yes, they will want to see other assets that you have. So they're going to want to see whether it's personally or in that corporation or entity itself. They typically will look at your global portfolio. And let me touch on what Mel and I get into when we go for financing. So Mel and I, they'll look at us personally, which Mel and I, well, we don't have jobs, but we are employed by one of our companies for tax purposes, right? I'm the lowest paid employee in my company. So we show them that T4 income, right? And then we'll also show them all the other structures and entities and corporations and LLCs that we have, because they want to get a global look at what you're doing. Now that's in our situation. If you don't have all these entities or structures, they might just look at the income that you have coming in from your job, or from, if you're self-employed, right, from that income. And they might not, sorry, what I'm getting at here is they're also going to want to look at what else you've got going on. Okay, so be ready for that as well. Let's say if you're renting, they're going to want to see how much you pay for rent. They might want to see your lease agreement, that way to verify it. If you own the place you live in, own the dwelling you live in, they're going to want to see how much is left on the mortgage. They'll want to see the mortgage documents. They might want to see the expenses. That way they can calculate basically they're calculating your total debt service ratio, total debt, TDSR, or your TDI in the States mostly, total debt income to income. So that's something they're going to want to see. So you know this ahead of time. They're going to want to see all the ins, all the outs. So what can you do? Well, prepare. Get all your pay stubs in order. Get all your letters from your employers. Get all the bills you have. So any bills you have for your mortgages, all that stuff, they are going to want to see, right? And this is pretty standard across the board. I'm not a mortgage broker, full disclosure. However, we've done this enough times that it's just second nature to us now. Even the other thing too, your tax bills, anything like that, they're going to want to see because they need all of that information for your total debt service ratio. Banking information, and they might have other specific documentation that they're going to want you to fill out, applications. They might want your personal net worth, your PNW, get used to acronyms like that. Personal net worth, people have issues with that because it's kind of, I wouldn't say it's subjective or convoluted. However, you could technically mark your golf clubs. I think Rich Dad Poor Dad says that in the book is PNWs are kind of inflated because you can put that $1,000 pair of golf clubs that you just bought as $1,000, but we all know when you go to sell them, they're not going to be that. So again, the personal net worth, we use it. However, I'm not really too keen on it. So they might look at that as well. They might ask you for that. But yeah, so those are kind of the things that I want you to have ready for your mortgage broker, because when you find that deal, when you find that hot deal, you're going to want to know that the mortgage broker, let me backtrack. You're not going to want to be the bottleneck, right? That's the worst thing. You've got an awesome deal under contract. Let's say you have 2 weeks for due diligence or a month for due diligence. The last thing you want to do is be the bottleneck, right? And financing is one of those things that takes the most amount of time. Finance, and it's not just financing. Financing includes appraisal, right? The sooner you get your docs in, the sooner that ball gets rolling. Now let's kind of go over, once you have that accepted offer, what should the realtor be sending over to the financial institution or to the mortgage broker? And I want you to think of this because you can't assume that everyone else is doing what you want them to do or what you think they should be doing. Okay, and what I mean by this is just because you get an accepted offer, just don't assume that the realtor is going to be sending everything over to the lawyer, the attorney, any of that. Okay, you need to be on top of that and in charge of that. So you know that the mortgage broker is going to need certain documents, right? They're going to need to see the agreement for purchase and sale. Different places call it different things. Basically, they're going to need to see the offer, the accepted offer. If it's listed on, let's say, realtor.ca or realtor.com, they will want to see the listing, right? Financial institutions like to see the listing. And this will be, for example, let's say the building is listed for X amount of dollars, but then your agreement for purchase and sale is that much higher. Well, they're going to say, how come it was, let's just make up numbers. How come it was listed for $500,000, but you paid $600,000, right? Is it a bidding war market? Is that why? Did you, and financial institutions look at this, and a little bit of story time here is they want to be financing houses, right? They want to be financing assets, okay? And some people will sometimes put all the furniture into that, right? Depending on the asset. Or maybe I've seen some people that try and say, hey, and the boat in the garage will stay, right? And again, the banks, they'll sift through that. And how come this is higher than, or so much higher than the purchase price? And maybe because, and then they do not want to be financing boats in the mortgage or different things like that. So anyway, I'm not saying this is all the time, but this is why they like seeing the listing. These are stories that I've heard in the past. And they're also going to want, think about this, your mortgage broker is going to need the lawyer information. So think of everything that happens on closing, right? The mortgage broker is going to want to let the financial institution that they pick, or the MIC, the Mortgage Investment Corporation, they're going to need to instruct them which lawyer is going to be closing the deal on your end, right? So they're going to need that information. They're going to need some banking information for you. They're going to want to start seeing proof of funds, right? So they're going to start asking, because the financial institutions are going to ask, where is the down payment coming from, right? There's always a down payment with any real estate, 99.99% of the time typically. And we could go down a whole other rabbit hole here of creative financing, and that I love saying, yes, you need a down payment. However, it doesn't need to be your money. And that's the beauty of creative financing. But yes, they will need to have those types of things. And again, they're going to need ID. They will need ID. I already touched on that. But what I was saying is confirmation of down payment. They are going to want to see that you have the funds in your bank account and where that money came from, right? So just start thinking about that. It's all fine and dandy. Some realtors, actually, you know what? This has been my experience recently. I just needed a letter, actually on my last two offers. That's right. On my last two offers, one was a short-term rental in Florida, and they needed proof of funds. Sorry, three of them. Okay, story time here. They needed proof of funds on my last three offers. One is a pre-construction deal in Florida and in a new development. And before they would even put me on the waiting list, I had to have a soft, basically a letter of intent, like a soft approval from a financial institution or a mortgage broker in the States. That was to even get on a waiting list for pre-construction. Okay, so this is getting the ball rolling even before anything really real estate happens. Another one was a short-term rental, and before I could even put the offer in, they needed proof of funds. Okay, so this could be even earlier than I was suggesting with just the mortgage broker and that. So this is something you should be thinking about. And the third one, I think it was, we had to have the financial institution draft up saying, this is how many funds are available for the down payment on a contract. So this is the importance of having your ducks in order, right? Getting your stuff ready. And I know I say stuff, I'm talking pretty general. But as a real estate investor, like everything that I talked about, I know it's general and it's going to be different from mortgage broker and financial institution. However, these are things that you need to know about it, right? You don't want to be the bottleneck, like I said. So let me go through a few questions here. I just want to catch up with all of you. Giorgio, okay, Giorgio, hello. Claudia, hello. Giorgio, Dave, can you invest? Okay. And then Tyson, hey Dave, I'm from Sault Ste. Marie. Okay, not far from me. Sault Ste. Marie, one of my hockey rivals when I was the old days, the hockey days. Okay. Supposed to close on my first duplex today. Nice. Do you own any properties here in the Soo? No, Mel and I do not own properties in the Soo. Actually, no, first off, congratulations. That's awesome, Tyler. Thank you for sharing that. Good for you. Amazing. I'm pumped for you. Mel and I do not own any properties in Sault Ste. Marie. Sault Ste. Marie is Northern Ontario, just like us here in North Bay, Ontario. If you're wondering, hey, where in the heck is that? We're about 350 kilometers north of Toronto as a landmark. Everyone knows where Toronto is. But that's awesome. No, we do not own any properties in the Soo. I have looked at that market. Sioux's a border town as well, right? So lots of interest there. It's heating up there as well. Giorgio, David Mel, I love your channel. Been following you guys for over a year now. I've learned a lot. Thanks. Keep up the good work. I love it. Love it. I love it. I love it. Thank you, Giorgio. Appreciate it. If I joined the mentoring or the mentorship program, would you be able to refer me to your team of mortgage brokers? Absolutely, absolutely. Once you're part of our mentoring program, the Action Family, I personally introduce you by email to the mortgage brokers that we use. Any professional that we use, lawyer, accountant, mortgage broker, insurance, real estate agents, we link you up with the people that we use. And why is that important? Okay. And great question. I'm just thinking, and I know this is kind of not exactly what you asked on. However, just to touch on this is, why is it important to have a team of, and write this down, investor focused, right? They have to be investor focused. There's tons of lawyers out there. There's tons of accountants. There's tons of mortgage brokers, insurance brokers, real estate agents, right? For days and days and days. So we all know that. However, investor focused is a totally different skill. And I'm not just talking someone that maybe has done one deal or anything like that. I'm talking about someone that this is their main source of income. This is their bread and butter. They do this all the time, right? And that's exactly what you want. So yes, absolutely. The mortgage brokers that we use, They understand creative financing, okay? And what is creative financing? Creative financing is basically, I shouldn't say, well, it is outside the box thinking, but it's using other people's money, right? OPM, another acronym that is very important in the real estate world, and that's something you should get to know. These mortgage brokers, they understand it. I've had mortgage brokers tell me that's illegal. And it's like, no, it's not. You just don't know what you don't know. Or they say, oh, you can't do that here. Or that doesn't work here. And it's, yes, it does. So those are not the mortgage brokers that you want to be using. So if ever you are looking at doing creative financing, and I know we're going kind of, but if you have more questions, don't hesitate. If ever you are looking to do creative financing, one thing that I just don't want anyone to let them not deflate you or not feel defeated or kind of take away your thunder is when we first started, Mel and I, we heard it all the time. And these are a couple of things that we heard. Creative financing, it just doesn't work here, you know, or no one's doing it. It's not really legal. And I remember we literally thought it was mafia. We thought it was, what do you call it? Loan sharks, things like that. But it's not. It works everywhere. People are doing it all over the place. Just because you're not hearing about it doesn't mean it's not happening, right? And then the other thing as well, so if a mortgage broker, before I jump on to the next one, if a mortgage broker tells you that's not doable, that's illegal, that doesn't happen here, that doesn't work here, don't listen to people that does, you know, it's a fraud, it's a scam, run. That mortgage broker, with a grain of salt here, that mortgage broker probably doesn't understand creative financing, which is fair, but you don't want to be the one to have to explain it to them, right? Or the one to have to, you know, for lack of better wording, maybe be a guinea pig on their first deal. So if your mortgage broker, your lawyer, your accountant, if you're hearing things that this doesn't work, just know that it works in Canada, works in the US, and you just need to find someone that understands it. There was a second part there, but I forget. So I'll go to the next question, and if I remember, I'll come back to it. Giorgio, Dave, so do we need money? Okay, sorry. Do we need money to make down payment for your first property? So that's where I'm at now. So Giorgio, yes, 99, and this is something people will Mel and I get messages all the time on social media. You guys said there's no down payment, fraud. No, let's pump the brakes here. And what I mean by that is, yes, you're always going to need a down payment, okay? Again, typically 99.9% of the time, you're going to need a down payment. Now, this is where the creative financing comes in. You need a down payment. It doesn't need to be your own money. And some people will say, well, Dave, they've told me I need to have skin in the game. Yes, you need to have skin in the game, but it doesn't need to be your own money, and it doesn't need to be your skin in the game. What do I mean by this? Let's just use very simple examples here, and this falls into yours, Tyson. Let's say if you didn't have any funds, there's a lot of different ways to do it. And if you're looking to buy an income property, let's say you need 20% down payment. Well, you can borrow that 20% down payment and use it towards that 20% money and use it towards your down payment, right? And again, everything is legal, moral, ethical. You have to let the financial institution that you're using, let them know. So it typically doesn't work with the big five banks. However, again, there's a time and a place for every financial institution, and it's all about like the life cycle of the deal, which again is so important because that's where you and your mortgage broker need to understand. If I'm going into the asset and I'm using creative financing, we're going to use different financial institutions, different lenders than at the end of it when we're financing or refinancing, and then bringing it to, let's say, an A lender. So that's where that mortgage broker piece in the beginning, and kind of to reiterate what Don was saying, yes, absolutely, we introduce you to investor-focused mortgage brokers who get this. They understand that the lenders, the investors that we use in the beginning are not the same that we use in the end. And none of them is better than the other. It's just they all have their place. So for your example, Tyson, you would use creative financing lenders in the beginning. You would borrow those funds, and it all has to make sense. And this is where I use my cash flow analysis matrix, because if it doesn't make sense and I don't know how I'm going to pay them back, I don't do the deal, right? If I don't have the exit, Mel and I say it all the time, you need to exit a deal before you enter it, meaning you need to know how in the heck you're going to pay back that money before you borrow any of it. It's a lot of full disclosure there, Tyson. Yeah, the deal has to make sense. It won't make sense for every deal. You might have to kiss a lot of frogs. However, that's the beauty. That's the fun of real estate, right? If it was easy, everyone would do it. Oh, the question, Tyson. Dave. Oh, did I miss one? No, Tyson. Dave, coming from a smaller city like Sault Ste. Marie, okay. I think is Sue bigger than North Bay, where I am? Anyway, what are your thoughts on using lawyers, accountants, brokers from other cities? Good question, Tyson. And we do a mix. So I pretty much have, I always have at least two of each. So I have a lawyer in my city. I have a lawyer in Toronto. I have a accountant. I have two different accountants that I use for Canada. I've got a couple of different CPAs that I use for the States. What I'm getting at is the same thing with mortgage brokers, different cities throughout Canada, different states in the States. What I'm getting at is approximately 75,000 population. Yeah, it is bigger than us. I think we're like 50 or something, Tyson. So we're in a small city as well. Now, it's not necessarily where people are located, right? So we have attorneys in the States. We have lawyers here in Canada. We have different accountants throughout Canada where they're not in my city. They're not even in my province. They're not in the people we use in the States. I haven't even met them, right? However, they are the ones that we choose. So because they're investor focused. Again, always use investor focused. So Tyson, to touch on that, it doesn't matter if you're in a small city. It doesn't matter if you're in a huge city. It doesn't matter which market you're on. Now with online, you could basically DocuSign a bunch of different things. So that is not necessarily a huge component anymore, location. It's basically, as long as you have Wi-Fi and an internet connection, and you know what people do, which professionals, to use, then yeah, it doesn't matter where you're located, in my opinion. Kevin, any advice for those who are not Canadian residents? Yes, absolutely. We help a lot of people. We have a lot of mentees who do not have their PR, their permanent residence. If you would have asked me 2 years ago what a PR was, I'd have been like personal relations. I don't know, what is it? Anyway, I love the fact that our team is growing, and we have a lot of people that have come to Canada on work visas, school visa, whatever it is, and they don't necessarily have their PR, okay? PR, their permanent residence yet. And absolutely, 100%, even if you do not have your permanent residency, you can purchase real estate. And more importantly, you can purchase real estate the way Mel and I do with creative financing, okay? Now, it's going to be a little different. And what I mean by that is, for example, right now when I'm purchasing in the States, I'm a Canadian resident, right? So I'm not a US resident. Therefore, I'm considered a foreign national in the States. So yes, they still finance me, it's just different rules. And that's the exact same thing for someone who's in Canada and is not a permanent resident, okay? So yes, they can still get financing, yes, they can still apply for everything. However, what's gonna change is the interest rates might be a little higher, and the loan to value might be a little lower. Loan to value is basically how much money they'll give you towards the purchase price. And obviously the higher the better, because it's the less money you have to come up with. But, however, we use creative financing anyway, so they're mostly 100% finance deals, or as close to 100% as possible. So absolutely, Kevin, great question. We have a lot of people that's a limiting belief. Some people will say, well, I'm gonna wait till I get my PR. And what I tell them is, why, and yes, I understand, and people will say this, but I can get a higher loan to value then, I can pay lower interest then. Yes, however, you're losing time, right? You're losing time in the market. And I know it's cliche and people say it all the time, you can't time the market, it's time in the market. And it's true though, it is very true. So that is something that, even if you don't have your PR, Kevin, or anyone that's listening that doesn't have their PR, and even with creative financing, yes, you might pay higher interest, but if the deal is the right deal and it makes sense and it cash flows and the ratios are good, I'll take that time in the market as opposed to waiting for the perfect deal, the perfect interest rate, all day, every day. Slam dunk. Awesome. So if I don't see any more, awesome. Yes, make sure if you like what you're hearing today, please subscribe to the channel, like it. You'll get notified when we go live. Mel and I are going to try and start going live again once a week. I miss it. I enjoy doing the Q&A like this, and every week will be a different subject. So this week was, what should you have ready for mortgage brokers, financial institutions? Every week will be a different subject. And, Tyson, Dave, how do you accurately estimate your after lift, and the lift is how much you increase value in the property, of your property? Do you use any professionals like an appraiser before buying, or does it all come from knowing the market? Yeah, Tyson, and I honestly resort back to my cash flow analysis matrix. And like I was saying earlier, I was literally in it before coming live with you guys, which is awesome, reviewing a deal. And I thought the deal made sense. I was looking at the net operating income, which is why I kept messing up with the, oh my gosh, notice of assessment. But that is why, I was reviewing deals. So that's what I rely on. As for appraisers, financial institutions, and you should want this too. Appraisers are there to keep you in brackets. They keep you within certain lines, okay, certain brackets. And what I mean by that is, this is what they do all day, every day. They analyze deals, they analyze buildings, they analyze assets, they analyze markets. They have their finger on the pulse, right? So they know, or they should know, where an asset is in that bracket, right? Is it the top end or the bottom end of those amounts? So yes, even if it was a private deal, even if a seller told me, I will hold 100% financing for you, I would still want an appraisal, because and yes, you have to know your market as well, and you could ask appraisers or investor focused realtors, but you have to understand your market, you have to get a baseline. So even if you're buying a 100% finance deal off market through the seller, I would still request an appraisal, because again, exit before you enter the deal. What if you bought it at the absolute highest and there's no way of lifting that property? Then you're going to be stuck in the end holding the bag, right? And then you won't be able to exit the deal, and that's when things start to unravel. So appraisers, any financial institution, even if it's private investor, private lender, will want it. We use secured funds such as RSPs. You can do it 401k, Roth IRA in the States. They're going to want appraisals as well. So appraisals is not a bad thing. It's something that you want to cover your you-know-what, okay? And I think you had a second part. How does it all come from knowing the market? Yes. So again, yeah. And again, we use our cash flow analysis matrix. Hey, Dave, I live in a hot market. Does it work here? Yes, absolutely. And I think that's Taze. So yes, Taze, it does work. We have people in hot markets doing it everywhere, okay? And also, we're looking at hot markets as well. We're putting offers in. If a seller, and I'm assuming you mean creative financing here, Taze. So what I'm going to say is this works everywhere, whether it's Toronto, Vancouver, Montreal, Ottawa, if you're in California, if you're in Miami, doesn't matter. Atlanta, like all these hot markets, okay? It still works. Creative financing still works, because it comes down to the bottom line. Why would a seller ever hold financing for you? Why would they? Why would you hold financing for someone else? Probably because it's going to benefit you, right? These sellers don't just do it from the bottom of their hearts. Yes, they have to get to know, like, and trust you somewhat. Actually, you know what? Not necessarily. However, they do it because it benefits them. It benefits them tax-wise, okay? And that's a whole other subject, but yes, it does work in hot markets. It works in secondary markets, works all over the place. People have been buying businesses for years and years and years using creative financing in that. So yeah, it's not something new. It's not something that has just come around. It's coming more mainstream. It's becoming more and more mainstream. But yeah, it definitely works, and definitely works in all types of markets. We're actually doing it now in Costa Rica and Mexico. So not just Canada and the States anymore. Okay, so yes, good question, Taze. That's awesome. Okay, so again, if you like what you're seeing, I've enjoyed the dialogue, I've enjoyed the questions, that's awesome. If you guys like what you're seeing, please like the channel, subscribe. We try and release a video once a week as well. So every Wednesday at noon, we'll be coming live with a new subject every single week. I'm not too sure what we'll be talking about next week. I've got 2 ideas floating in my head here. So even if you guys have some suggestions, please do not hesitate to put it in the chat. Or if you're watching this video after it's live, shoot me some ideas. Hey, Dave, I would love to talk about so-and-so. I'd love to talk about this, or I'd love to hear what you think about X, Y, Z. So don't be shy. We answer every single question personally in the YouTube as well. But yeah, like, subscribe to the channel, and I'll see you next week. So thank you so much to everyone that came live. Thank you so much to everyone that's watching after. I appreciate everyone that asked questions. I love it. The interaction is one of my favorite parts. So, and everyone else in the other platforms, thank you so much for tuning in. Awesome. See you next week. Bye for now.
I'm Mel.
And I'm Dave.
And we're the Investor Couple.
Couple of mentees there.
You're back live.
Oh, on YouTube?
Both.
Oh, I'm good for YouTube. No, I'll just go live on, where are we? Is this TikTok? TikTok there, and Facebook here.
I'm Mel.
And I'm Dave.
And we're the Investor Couple. To invest your money and you want to maximize on your profits.
This is where real estate truly wins.
2.5 years in the making.
Who called the plumber?
And you now have an infinite return on investment